Hello and welcome to Biz Daily. I'm Jon Jordan. Today we're talking about Chinese companies who are pulling themselves off the NASDAQ. Now this might seem like a very technical subject, and to a degree it is, but actually it's showing a really interesting trend that's happening at the moment. So the kind of key to this trend story is that one Chinese PC and mobile publisher called KongZhong, which is floated on the NASDAQ stock exchange, which is obviously an American technology stock exchange, and it's announced today that it's considering a bid to take the company private. Effectively that means that someone has come in and said they want to buy all the shares of the company that are currently available to trade on the NASDAQ, buy them all back, effectively then taking the company from a floated company on the NASDAQ to a privately held company. What's interesting in this case is that the person who's doing the bidding on this kind of proposal is the company's CEO, who's being backed by a venture capital company in China. So basically what they've done is they've put in a bid that values the company more than its current share price, thus kind of giving an incentive for current people who are holding the shares to sell the shares for a profit, and then the company then goes private and then is kind of controlled by the venture capitalist, who will then presumably sell it off to someone else. So the reason that companies do this, it happens regularly on stock exchanges around the world, is that companies kind of believe that they're not being properly valued by the stock exchange they're on, they're not being properly valued by investors, and they kind of feel they would do better if they weren't on the stock exchange, having their kind of news valued all the time. Obviously if you're on the stock exchange, any small bit of news can make your shares go up, or perhaps more importantly down. Every 4 months you have to show how your company is performing, you know, what its sales are, what its profit is, what any kind of issues. You have to be very transparent, and certainly for the top management in companies it can be very time consuming to be a company that's floated on a stock exchange anywhere in the world, not particularly in the NASDAQ. So this seems like a very technical kind of subject. That presumably there are some reasons that the guys at KongZhong want to do this. So this would be like a small story. We wouldn't really bother talking about this in the Biz Daily, apart from the fact that that this is the fourth Chinese company in the last year to do a similar move. So kind of to go back in time, why are all these Chinese companies on the NASDAQ in the first place? So China for a long time has been a very strong PC games market. Obviously China is a very big company, a very big country, over 1 billion people. It's never had consoles, and so you know, PC has always been a massive, well, the biggest gaming sector for the Chinese. And so out of this, some very big companies have evolved, and kind of for them financially to obviously they make money by selling their services and selling their games. They generate profit off that. But if you're growing very fast, you want to kind of have more. You want to have more investment money. So one of the easiest way of doing this when you get to a certain size is to sell your shares on a stock exchange. For those Chinese companies, the Chinese stock exchanges, maybe there's kind of one in Hong Kong and one in Shanghai and one in Shenzhen. So they're the main ones. Now they're kind of fairly mature kind of stock exchanges. They're still not the same as floating in say the NASDAQ or the New York Stock Exchange or the London Stock Exchange, those kind of well-known stock exchanges. They're still a little bit kind of localized, and there's restrictions on what you can do with the shares and who can buy the shares. So for a long time Chinese companies have come to the US market, particularly the NASDAQ market, to kind of float their companies and gain investment so they can kind of speed up their growth. Now what we're seeing is they've kind of come to the conclusion that the NASDAQ isn't the place for them. Perhaps they don't feel like US investors like games companies very much. Obviously there's been some fairly big, more recently some very big companies like King and Zynga, who have floated, King's on the New York Stock Exchange and Zynga's on the NASDAQ. They've floated, and they've their shares are kind of what are called underwater, so their shares are still valued less than when they floated. So perhaps it's like these Chinese companies think games are not being properly valued by US investors. There's another issue that the Chinese markets have over the years become more mature, so maybe these companies are thinking we're better off in China. That's kind of ironic at the moment because the Chinese markets are going through an absolutely awful kind of 3 months. So even though they're up year on year, they've doubled. The Chinese stock exchange at the moment is kind of in meltdown. So half the companies on the Shanghai exchange, you can't actually buy or sell their shares at the moment. They've actually kind of withdrawn themselves from sale, and that's basically because the market's down 30% over the last month, and it's basically the Chinese government stepping in and trying to get people to buy shares, and kind of this weird kind of, as China often is, this weird kind of mixture of kind of communist diktat and market forces is now currently ruling those markets. So perhaps the Chinese markets aren't the best place for these companies to go, but anyway, they've made the decision. As I said, it's not just there are more companies who are doing this. So not all of them have agreed to it, but the kind of really interesting one last year was Shanda Games. They're quite a big company, again PC, bit of mobile, and they went through the most tortuous process. Eventually they did go private, but again it was like KongZhong, that their ex-CEO put together a bid with some other companies to take the company private. It was considered for a while, and then the investment companies who were backing the bid all suddenly changed, and you had this kind of, over the process of 6 months, you had all these different companies actually changing, and another Chinese games company got involved for a while, and then they pulled out, and it all got it was a very, very kind of messy process. And because these are publicly traded companies, they have to be very transparent. So in the end that deal went through, but it was very bad, I think, for the reputation of Shanda Games. So I'm sure KongZhong is attempting not to do that. The other companies who are on the NASDAQ who are going through a similar process, probably not as convoluted, are Perfect World. Again, they're another big, actually probably one of the more Western kind of oriented of the Chinese games companies. So they're considering a management buyout, effectively a management buyout. So some venture investments of venture guys have put together some money to buy that company back. And the other one is iDreamsky. That's a little more peculiar, because iDreamsky only floated about a year ago, so it's quite weird that they're kind of pulling back off this decision to float and then suddenly deciding they don't want to. And I think it just, the kind of trend we're seeing here is that the Chinese kind of games companies, they kind of see the world slightly differently, I think, to other say more Western companies. I mean, I think we have to be a bit careful. China is obviously a very different kind of culture. That financial culture is very different. Obviously the government has much more influence in what goes on in China, on a cultural level, on a political level, on a legal level, and on a financial level. But I do think it's interesting that while pretty much all big Chinese games companies now are looking outside China, so whether they're looking to Southeast Asia or Korea, or maybe a lot of them now are looking to Western markets, so they're looking, particularly on mobile, they're looking now to kind of aggressively release games in North America and Europe, or license games for those markets, or that's they see as their big growth area now, to become truly international companies. That some of the biggest companies, Chinese companies, who have been international in the sense that their financial shares have been available to buy and sell, they're actually retrenching. I guess in all these cases, what will be interesting to see is what the end game for these companies is. Is the end game that they just stay private and they just kind of operate in a kind of in a private manner, like lots of companies are private. You don't have to be on the stock exchange. There's no rules that says companies have to be on the stock exchange. But it'll be interesting to see, I guess, in the long run, whether if they list on Chinese stock markets in the end, they kind of feel like the Chinese investor will understand them or rate them more favourably than Western investors have, where there's maybe been a bit more tension between a Western outlook on games per se, and maybe on Chinese companies as well. So we'll keep our eye on that one, but it's certainly fascinating. I guess, as we say, be very careful if you're investing in companies. Be very careful if you're investing in games companies. The games might be great, but the share price doesn't always go up. Okay, well, I hope to catch you tomorrow when we have some more news. See you then.